Welcome back. Well, let's get straight to CG Power Industrial Solutions. That's the next management on the show. The company reported better than expected operational performance, large part of the beat being driven by the power systems business. To discuss this and more, we have Mr. Natarajan Srinivasan, the MD of CG Power and Industrial Solutions. Hi, good morning, Mr. Natarajan. Thanks a lot for joining in. Well, could you tell us, has there been any impact for the elections or the order inflow in both your segments? That's the power systems as well as industrials. And more importantly, what's the outlook going ahead?
So order book as of 30th June 2024, it stands at about 7,054 crores. It's about roughly about 44% growth compared to last year, same quarter. Now, we have four businesses, if I may say so. One is motors and drives. The second is railways. Third is transformer. Fourth is switchgear, for purpose of order book. Transformer and switchgear, we combine it as power systems. I think election has not impacted this because order flow inquiries both are very strong in this business. In the case of motors, I think there has been some impact on account of the elections. But there again, order inflow has been higher by 20% for motors compared to the last quarter on quarter. Compared to March, I think the order book inflows higher by about 20% for motor. Railways, I think there has been some slowdown in floating of tenders. I think those tenders will eventually get floated from now onwards. So therefore, that will be made up. Whatever is lost is going to be made up in the next quarter or beyond that.
Well, the performance of the power systems business has really been driving growth. So I wanted to understand from you, how sustainable is the top line margins for the power systems business? Have margins peaked or is there scope for further upside?
So because of the demand environment and the huge order flow, generally pricing is better and therefore margins are better. But the current margins, what we got in this quarter have been due to very favorable factors on every side. See, in this business, actually, every order will have a different margin because orders are got on a tender. Whenever you close an order on a tender, you will know what kind of margins you get. Exports, you will get a different margin. Here, actually, a favorable set of orders, and then with some export orders being executed. All these cumulatively contributed for one of the best quarters in terms of margin. Where margins for this business will continue to be strong, continue to be in the teens, I would definitely say. But I'm not able to confirm whether this margin, whatever we get, can be sustained for the remaining quarters.
Mr. Natarajan, good to have you with us here. So the sequential decline in margins for the industrial business has been arrested. What does this indicate about pricing pressure? Where are margins headed from here?
So for the industrial business consists of two businesses. One is motors, other is railways. Here this quarter, actually, the railways business had a large volume, but lesser margin. Railways also, all orders are secured on tender. And then in some businesses, depending upon what others quote, and then, tenders will be finalized. And then if you are L2 or L3, you will have to match the L1 price. Therefore, while we have secured a lot of orders on higher volumes, margins have been lower because of lesser price. As you know, margin is a combination of sales price plus input cost. But because of the higher volumes that we have on railways, we are working on some cost initiatives. Going forward in the next 2 quarters, we will see margins improving for the railways segment. Then if the motors also come back from H2, which we feel from H2 onwards, motor business can make a comeback. Overall margins can be better showing in both the businesses from the second half from H2. I feel this can be better than what we had the H1.
Well, the Railway Minister, Mr. Ashwini Vaishnav, announced that a majority of the 2.5 lakh crore of budget allocation will be used for safety works. In light of the 55% stake acquired in CG Tronics, what is the opportunity available and the conversion expected as well?
So whatever you have said on the allocation in railways and subsequently what the minister has said, minister has specifically made a statement that Kavach, that is train collision avoidance system, will get a large part of the outlay. And GG Tronics is one of the 4 companies in India right now which qualify for setting up coverage systems across the railway stations and routes. And they will be participating in the tenders which are likely to get opened up in this in the next few months, both for loco tender as well as for the train tender. Though this company is a new entrant, they have got the most of the trials have been gone through, etc. At least in the initial years, we expect to back 20% market share, 15 to 20%, minimum of 15, maximum of 20% market share in the overall tender. Assuming, supposing the tender values, let us say 6,000 crores, I think 1,500 to 2,000 crores worth of business is possible that can be backed by this company. And this is only a beginning. I think this safety and safety, the entire aspect of embedded safety, signaling, then coverage, etc., is going to be a prime importance for railways, and the business is there for the next several years, at least for next 7 to 10 years. Therefore, we see opportunity, significant opportunity in domestic market, and coverage also can be, once you are proven, once you execute some orders, there can be also export opportunities are there, because it is one of the very cost-efficient models compared to whatever systems are available elsewhere in the European and other markets.
Is there an intention to acquire the entire state in the distant future? What are the synergies possible between both businesses, and what additional product lines can be explored?
So I think, this company was founded by Manjunath, a technocrat. And then he and his son, who is also an engineer, they're very passionate, and they built the company from a small level to this size. And they are actually, very passionate about running this business. And therefore, they will continue to be involved in the business. We will work with them. At this point of time, we have got 55% equity, and they will continue to own 45% equity. While Kavach is actually solely the main business at this point of time. Anything to do with the embedded system, software, hardware, they've got 400 people working in this company. There will be a lot of opportunities in working together in our business, and then some of the new products that we will aim to jointly develop and do all that. So all those things will probably worked out in the next few months. But suffice to say that there is a huge amount of synergy for between GG Tronics and then CG's existing product portfolio, including the propulsion what we are developing, what we are almost completely developed, plus in certain other automations, a lot of opportunities are. Anything to do with power electronics, I think this company has got the capability to execute, develop and execute. So whatever we were not considering earlier as for a lack of in-house talent, now we will be able to bid and develop jointly with that.
Mr. Natarajan, when will new capacities come on board by this year, by the end of this year and next year, and how quickly would you be able to scale this up? And incremental top line at peak utilization from these new facilities, if you could put a number to it, would be helpful.
So power, for example, in the power systems, the transformer capacity, we are doubling the capacity from 17,000 MVA to 35,000 MVA. This will be completed by Q4. And similarly, the distribution transformer capacity is also going almost doubling the capacity to 10,000 MVA. So because of the strong order book and strong inquiries, right from the moment these capacities are implemented, the minimum time that is required for ramping up as just as a capacity build-up. Otherwise, order is not a problem. Order is there. The quickly we are able to scale up the incremental facilities, we will be able to operate at a full level. So the transformer itself, because of the doubling, the current turnover can get doubled. About 1,600 to 1,800 crores is the increase in turnover that can happen from next financial year. Switchgear, actually, we are expanding capacities of various products, including setting up facilities for RMUs. So those facilities will get implemented, completed over a period of time. Some this year, some next year, and then probably by something in September 25. And here also, I think these are all products which have huge demand. And transformer and switchgear demands are generally complementary in nature. We don't expect to have any difficulty in servicing the higher capacity. If at all, we may have to think of putting up some more capacity to meet the demand. That is the scenario right now. Only in motors, the motor expansion, there also we are doubling our size. We are currently manufacturing about 90,000 to 95,000 motors. We can get doubled to about 200,000 motors per month if it is operating in terms of capacities. But how much we will be able to sell, how much we will be able to export, it depends on how quickly we are able to capture the export market. So there again, of course, we have set a time frame of about 4 years. So that capacity alone, it depends upon what kind of orders we are able to get outside India and how domestic demand quickly recovers and goes up.
Okay, sir, we need to ask you this before we let you go. The street is very excited about the OSAT business opportunity. Could you share with us a progress report on that?
So I think, we have recruited the senior team, and then we have started floating tenders for various civil works, machinery, equipment, etc., supply, etc. It will take some more time, maybe a couple of quarters to say meaningfully what is the progress we have made, etc. Otherwise, we are just at the beginning of doing all the project initiatives. But intention is to complete the first phase of the project to a large extent within 24 months. So maybe after a couple of quarters, we'll be able to share with you some more details.
Okay, thanks a lot for that. Let's